The power of Vanguard S&P 500 ETF VOO. In this video, we would like to go through Vanguard S&P 500 ETF VOO. Please stay until the end.
This video has been structured as below contents. Stock market historical trend. Why VOO ETF investment? Do you need any expert skill to invest in VOO? VOO net asset. Performance of VOO. VOO expense ratio. Sector allocations of VOO. VOO top 10 holdings. Risk of VOO investment. Best practice of VOO investing. Summary.
Stock market historical trend.
Stock market return is about 9.79% per year since 1900. For last 10 years it is about 10.41%. For last 20 years it is about 7.64%. For last 30 years it is about 7.52%. So, we can clearly see that even there is short-term volatility in the stock market, however in the long run, it is generating significant returns. We know that market always goes up time and time again even through all of the economic disasters and dips. Even though the market generally goes up, people lose money on the stock market. Because people trend to time the market. They sell when they are panicking, and so they sell low, and then people generally buy when the markets are going high. Research suggests that even 95% of financial professionals can't actually beat the stock market. Therefore, investing in ETF can be a good way to earn long-term profit without any active work.
Why VOO ETF investment?
Vanguard S&P 500 ETF VOO, that tracks the performance of the S&P 500 index, which is a collection of the 500 largest publicly traded companies in the United States. VOO was launched on September 9, 2010. Here are some reasons why investing in VOO may be beneficial. Diversification. By investing in VOO, you are essentially investing in a basket of 500 stocks, which provides a level of diversification that is difficult to achieve with individual stock picking. This helps to reduce your overall portfolio risk. Low expense ratio. VOO has a very low expense ratio. High liquidity. VOO is highly liquid, which means that you can buy and sell shares of the ETF easily and quickly, even during volatile market conditions. This is because it trades on the stock exchange just like a stock. Strong historical performance. The S&P 500 index has a long history of strong performance, with an average annual return of around 10% over the past 50 years. Of course, past performance does not guarantee future results, but the track record of the S&P 500 is certainly impressive. Easy to invest. Investing in VOO is easy and accessible to anyone with a brokerage account. You can buy and sell shares of the ETF just like you would with a stock, and you can invest as little or as much as you want. Overall, VOO can be a good investment option for those looking for a simple, low-cost way to invest in the US stock market with broad diversification. However, it's always important to do your own research and consult with a financial advisor to determine if it's the right investment for your specific goals and risk tolerance.
Do you need any expert skill to invest in VOO?
You don't need to be an expert to start investing and building wealth in the stock market. In fact, there is literally one ETF that you need to invest and hold forever, that is VOO. This ETF will help building wealth over long term without a lot of work.
VOO net asset.
As of April 4, 2023, the net assets of the VOO were approximately $774.6 billion. This information is subject to change based on market fluctuations and investment activity.
Performance of VOO.
Over the long term, the performance of VOO has been quite strong. According to historical data, the average annual return for VOO since its inception in September 2010 has been around 12.96%, although there have been periods of volatility and losses as well. It's important to note that past performance is not a guarantee of future results. If you would have invested $10,000 in 5 years ago, your investment would have grown to $17,203 even despite recent volatility. In the same way, if you would have invested $10,000 in 10 years ago, your investment would have grown to $32,043 even despite recent volatility. However, it's important to note that the performance of VOO, like any other investment, can be volatile in the short term. For example, in 2022, VOO experienced a significant decline, but it is now in recovering mode steadily. If you buy VOO at this moment, you are buying it at least 10% discounted price, which might be a good chances.
VOO expense ratio.
VOO has a low expense ratio of 0.03%, which means that you'll pay only $3 for every $10,000 invested annually. This is significantly lower than the average expense ratio for mutual funds and other ETFs, making it an attractive option for cost-conscious investors.
Sector allocations of VOO.
The sector allocation of the Vanguard S P 500 ETF VOO is determined by the composition of the S P 500 index, which is a market cap-weighted index of 500 large-cap U.S. stocks. The sector allocations of VOO are as follows, as of March 31, 2023. Communication services, 7.7%. Consumer discretionary, 10.7%. Consumer staples, 6.7%. Energy, 4.8%. Financials, 11.7%. Healthcare, 14.3%. Industrials, 8.5%. Information technology, 27.3%. Materials, 2.8%. Real estate, 2.7%. Utilities, 2.8%. It's important to note that the sector allocations of VOO can change over time as the composition of the S P 500 index changes. However, VOO is designed to track the performance of the S P 500 index as closely as possible, so its sector allocations will generally reflect the current makeup of the index.
VOO Top 10 Holdings.
The Vanguard S P 500 ETF VOO seeks to track the performance of the S P 500 index, which is a market capitalization-weighted index of 500 large-cap U.S. stocks. As a result, the allocations of VOO are determined by the composition of the S P 500 index. As of February 28, 2023, the top 10 holdings in the S P 500 index and their respective weightings were as follows. Apple 6.6%, Microsoft 5.56%, Amazon 2.5%, Nvidia 1.73%, Tesla 1.65%, Berkshire Hathaway 1.65%, Alphabet Class A 1.43%, Alphabet Class C 3.3%, ExxonMobil 1.35%, United Health 1.33%. It's important to note that these allocations can change over time as the composition of the S P 500 index changes. However, VOO is designed to track the performance of the S P 500 index as closely as possible, so its allocations will generally reflect the current makeup of the index.
Risk of VOO investment.
As with any investment, there are risks associated with investing in the Vanguard S P 500 ETF VOO. Some of the key risks to consider include: market risk. VOO is subject to market risk, which means that its value can fluctuate based on changes in the overall stock market. Factors such as economic conditions, interest rates, and geopolitical events can all impact the value of the stocks held in the S P 500 index, and therefore the value of VOO. Stock-specific risk. VOO is also subject to stock-specific risk, which means that the performance of individual stocks within the S P 500 index can impact the overall value of VOO. If one or more stocks within the index experience a significant decline in value, it can drag down the value of VOO as a whole. Tracking error risk. While VOO is designed to track the performance of the S P 500 index as closely as possible, it is not possible to perfectly replicate the index's performance. As a result, VOO may experience tracking error, which means that its performance may deviate from the index's performance to some degree. Liquidity risk. VOO is an exchange-traded fund (ETF), which means that it is bought and sold on a stock exchange. As with any stock, there is a risk that there may not be enough buyers or sellers at any given time, which can impact the ability to buy or sell VOO shares at a desired price. Foreign exchange risk. VOO invests only in US stocks, but it can be held by investors in other countries. As a result, investors outside of the US face foreign exchange risk, which means that changes in exchange rates can impact the value of their investment in VOO. It's important to carefully consider these risks, as well as your own investment goals and risk tolerance, before investing in VOO or any other investment.
Best practice for VOO investing.
Understand your investment goals. Before investing in VOO, it's important to understand your investment goals and risk tolerance. VOO is designed to provide broad exposure to the US stock market, but it may not be appropriate for all investors. Diversify your portfolio. While VOO provides exposure to 500 large-cap US stocks, it is important to diversify your portfolio further to reduce your overall investment risk. Consider investing in other asset classes, such as bonds or international stocks, to achieve greater diversification. Invest for the long term. VOO is a long-term investment, and it's important to maintain a long-term perspective when investing in it. Short-term fluctuations in the stock market can be unpredictable, but historically the stock market has tended to rise over the long term. Consider dollar-cost averaging. Rather than investing a lump sum in VOO, consider dollar-cost averaging, which involves investing a fixed amount at regular intervals over time. This can help reduce the impact of short-term market fluctuations on your investment. Monitor your investment. Keep track of your investment in VOO and periodically review your portfolio to ensure that it remains aligned with your investment goals and risk tolerance. Rebalance your portfolio as needed to maintain your desired asset allocation. Invest regularly. The key to building wealth through investing is to make regular contributions over a long period of time. Consider setting up automatic investments into VOO on a weekly, monthly, or quarterly basis. Consider consulting a financial advisor. If you are unsure about how to invest in VOO or other investments, consider consulting a financial advisor. A financial advisor can provide personalized advice based on your individual financial situation and investment goals.
Summary.
It's important to note that no investment is without risk, and investors should always do their own research and consult with a financial advisor before making any investment decisions. The most important thing is to just get your money invested as quickly as possible, no matter what the stock market is doing, because your wealth would be made over the long period of time. It's also a good idea to consult with a financial advisor to determine if this investment is suitable for your particular situation. Feel free to leave any questions or comments down below, and I will do my best to answer every single one of them for you.
This is a brand new channel. If you find any values from this video, please subscribe and like. It will motivate us and keep alive.
We hope to serve you the best.